Good morning, team. Ready for another week? Good morning, Stelios.
Hello, Kay.
How
Where's
are you?
when's Ryan back?
I think tomorrow, if I'm
Okay,
not mistaken, he will be back.
okay, no problem. Just curious. How
Yeah.
are you, my friend? How was your weekend?
Yeah, the weekend was okay. Finally, we had at least one of the 2 weekend days dry.
Wow.
Yeah, it's not a good summer. Not a good summer at all.
Mm.
Here so far. We need that jet stream to move a little bit.
Yeah.
Okay, well, let's get stuck in. There was not an awful lot to say over the weekend, but there are those usual Chinese developments. So we had, I think it was already late on Friday, we had this country garden developer saying that they were halting trading on 11 onshore bonds. That, of course, weighed heavily on the Chinese shares opening the week today. And there's also another one, Zhongxi, I think he's an asset manager also, who missed payments on maturing wealth products. And that now finally spurred the Chinese government to start putting up task forces to examine what's going on in their market. Perhaps time, but and I trust they were already on it, but yeah, it just puts more pressure on what's happening with the Chinese yuan and things. Um, they also announced that they would relax the curbs on for foreign strategic investments in firms. So now they are seemingly entering panic mode over there in China to try and correct things. Um, the PBOC, on the other hand, is fighting harder and harder against this CNY weakness, where the models and the market was trading rather in the 724.5, 725 zone. They fixed it at 716.86. It's as I said before, they have these special buffers that they can use to fix it lower, but for as long as this market is not going to buy into it, I don't think it's going to change much. This being said, it does show that they keep a very close eye and trying to keep a tight rein on what's happening to their currency. But I don't know for how long they can hold this up. I don't see actually why they are fighting. Well, psychologically, I can see why. In the actual facts, the market is where it is. They might as well acknowledge that and stop putting liquidity on the. It's like the left and the right hand. They're still putting liquidity in the market, so they're not going to do much to curb this CNY CNH weakness right now. Stelios, alarming what's happening in China still?
The Chinese opening up to foreign investments. I mean, that's something shows that there is trouble, right? So I don't know. I don't know what they can do to stop the fact that their economy is struggling, really struggling. And we talked about this last week. And it's when you have one of the two biggest economies in the world struggling, then that's going to have an impact on the whole world. But they're doing the best they can.
Well,
the problem is the numbers they're giving us are sometimes, the economic numbers are sometimes arbitrary.
massage,
But yeah.
massaged, we call it.
Yeah, exactly. So
Here in
I
the
don't know
end,
what to make of the whole situation because we do not have the full picture.
yeah,
But yeah.
I think in the end, what they really should do, but that's of course psychologically difficult to do, and it admits failure. It is something that Ryan, yourself, and well, myself to a certain extent don't need too much anymore. It's a haircut. Just cut through the pain
Yeah.
and start all over again. That's and they have, let's face it, they have enough reserves, they have enough money behind them to do whatever they do, whatever they want to do, bailouts or haircuts. I mean, bailouts is usually not giving a very good picture, but if they cut through the pain, that may be something that that the market may like. It's what happens if we see in the market when the hardest pain is taken. The market usually turns around and says like, okay, you have done, now you have taken your pain, and now we can start over again, you know.
I agree 100%. And if done correctly, it can be really, really positive.
Exactly.
So, yeah, I agree with you 100%.
Mm-hmm. Alrighty, over to Australia, but this is only like there's a lot of analyst stuff that came out over the weekend. So the in Australia, the analysts think that the RBA may just be done right now. It's in line with what we already heard before. It didn't have too much of an impact on the Aussie, but we will have a look at the prices on the Aussie because we had an interesting level where it held overnight once I should say, the Monday morning panic was over on the Chinese side. We had a decent rebound of that prior low in the Aussie. On the Kiwi, there's two things there, and just quickly already look at the data. What we've seen is that the Kiwi Performance of Services Index plunged under 50, and the prior revised went also down just under 50. So also the migration numbers, visitors and stuff coming off a bit. So I think on the Kiwi side things are not looking too bright. We're expecting the RBNZ out Wednesday early morning for us, and their shadow central bank was saying that they should not raise rates at this point either. So we are starting to get in a real standstill for the central banks, it seems. What else did we see? Okay, then I think we're straight away coming over to Europe, and again, it's a lot of analyst stuff that's going on. The forecasters, they apparently see another rate hike of the ECB in September. Well, they think that September ECB could go for another 25, not yet pause, but that would be the last one, simply the last one, and already expecting cuts starting to shine through in their forecasts from March 2024, which would be first quarter, where another forecaster who likes to be vocal and who and they have a lot of followers, Goldman Sachs thinks that the Fed is starting to go ahead with cuts from Q2 2024. So that's on the forecasting front. Just giving that to you. In the meantime, the German economic minister came out this morning, says that the indicators do not support a sustainable recovery yet in the Eurozone, and they see reduced dynamics in the labor market. So they are still very cautious. We know that the German economy is sputtering. We know that the data over there are not very good. And the economic minister seems to confirm that. That should, in a way, keep the euro on its toes. But let's have a look at those rates as well, because I think there's a couple of interesting things going on in the FX markets starting this week. What else? There was another article saying that hedge funds finally bought a lot of equities in the month of July because they were right behind the curve. We said that in a couple of times that the speculative community was so much calling for the top in equities that they were under invested, and now they seem to have. It's actually not July. The article said over the past week, so I guess that comprises the week ending Tuesday or so of last week as well. And it's funny because if you look at the S&P, for instance, and the other indices from Thursday, it started to look heavy again. So once they stopped buying, it does look like it's a bit more heavy again, although we are not breaking on the downside yet. that is basically it for me on the weekend news. Stelios, did you see anything else, or did you see something we should talk about before straight away getting into the what is upcoming?
Just a quick comment on the ECB that you talked about, the markets pricing another hike. I still think that the ECB and the Bank of England have more to do, simply because inflation is a lot higher than the US and then the target as well. So, and also wage growth is still relatively sticky, especially in the UK. So I think this is my main reason why I still think the euro and the pound should outperform the dollar after the dollar is done with this little spike that it's that we're seeing over the past few weeks, which I think is short covering. But anyway, and the other thing which is interesting is I was reading today that there in the UK, apparently there's been a change in the tax regime for housing. So when you sell property, apparently there's going to be a bigger, more tax to be paid. I have to look at the details, but basically this is driving a lot more supply into the market. And we know how much the UK is dependent on the property market. I mean, it's one of the big pillars of its economy and one of the, the wealth creation parts of the UK economy. So if UK property starts to tank, then that's going to have an issue, a problem with the economy as a whole. Just something to be aware of. And, having lived in the UK for 17 years, I only remember a couple of years where there was a kind of a sell-off in housing. Every other year it was ridiculous, and this was in the early 90s, if you remember. That was a tough couple of years for UK property. But after that, they've just been going one way, and the valuations of properties are just ridiculous. So I think we are way overdue for a correction in the UK housing market, and things like this, taxation and anything else that changes the structural part of it, then that's going to probably exacerbate the correction. But just something to keep in mind, which will affect the pound eventually.
Yeah. I was just going to say, because the UK typically is very very dynamic so adjustments will be felt pretty hard and fast. We've seen that, I mean, the latest example was when Truss came out with that stupid thing. How the market reacts in sterling to events when things change can be very, very call it dynamic or panicky. And we have to take that in account. The sterling is a fast-moving market when things are changing on a fundamental basis over here in the UK, whether it's positive or negative. It is a pretty dynamic market when things are starting to move, right?
Yeah, absolutely.
Yeah. On the other hand, and it's good that you talk about the UK, but there still seem to be a bidding war amongst the employers to keep their staff. So that is something that we need to keep an eye on in regards to wages, as you were pointing out as well, that they are still too sticky. That is not going to help the cooling wages, right? So we have to look at that when the next inflation numbers are going to hit, to see if that shows up in the numbers. Okay, what did we have? So Friday, after the latest flow chart, the PPI came out. They were the final numbers. Yeah, stickier. We had a bit of a sharpish move also when the Michigan hit the wires on a little slowing down in what the inflation expectations were. We had a bit of a yo-yo move, but then finally the dollar ended up on the clear winners side on Friday. So I guess we are going to, after having said all this, we're going to have a look at the what's coming up on the next this week. Today, quiet, but from tomorrow we are going to get into a relatively heavy data week again. We're starting with those Japanese GDP numbers. Really, unless we are seeing really very good numbers, I'm not, Japanese data are what they are. You need to really print numbers outside of what the expectations are to get stuff moving in the Japanese yen. Whoops. What did strike me today, though, is that we hit the 145 in the dollar yen, and the Japanese officials have stayed very quiet. I haven't seen any comment actually on the level of the dollar yen. So I would be a bit careful in trying to counter trade it here, because when the officials stay quiet, that's where the market a lot of times picks up the baton and goes like, okay, let's see where you are. We are going to have more Chinese data tomorrow. They are expected to rebound a little bit. I'm not sure. We will have to see where those numbers come out compared to expectations. And then we're going into a couple of days again, interesting days as well for the sterling, right? We're going to have the jobs report tomorrow. And the day after, we are going to have CPI, PPI, RPI. So if you have sterling positions, just know that we are going to have 2 days of pretty heavy data on the sterling side. So keep it sensible, keep it reasonable if you have sterling positions, and trying to take them over into those numbers. We could be on the move. Then we have a bit of other data as well tomorrow. We are also going to have retail sales in the States tomorrow. We're going to have more price indices coming out tomorrow. The New York Empire State Manufacturing is something that is, we could call it overlooked, but it appears to be a mover all the time. So keep an eye on that one tomorrow. We are going to have the Canadian CPI. So you see, we are going into a pretty heavy week. And then we are going to Wednesday, we are going to have this RBNZ, as I said already. We are also going to get housing data in the States, industrial production. So you see, there's plenty to stick our teeth in. We're going to have the Norges Bank on Thursday, and then the Philly Fed and all those things further in the week. So get ready. It's a quiet day today. So now we are going to get ready for that week, right? Shall we? Unless you want to mention anything else?
No, don't have anything else. It's been a very quiet weekend and start of the day so far. So
yeah. All right, let's move over to a couple of charts, shall we? And if there's anything you guys perhaps want to look at it specifically, or still you want me to talk about, just shout and I'll have a look at it. But I'm going to go over the majors because the dollar has been on the move, as we said on Friday. So on Thursday we had this trying this break, right, which failed, and then on Friday we came into this traffic zone, support zone, you call it. And then, I've been saying a couple of times, I think this low 109 is going to be important for the euro. And we are relatively sticky into this 109.50 zone. And one of the reasons is that the euro is doing pretty well on the crosses. If you look at all the crosses in the euro, apart from perhaps the sterling and stuff like the main carry trade, which is still Mexican peso by the looks of it, that is still doing well versus euro. But if you look at the euro dollar here, it still has to break through this zone. Even though if we break trend lines, I think for the more medium term, as long as this doesn't break, my bias is still to say we are in ranges because of those crosses, So we are going to have to break, the first one is going to be 109.70 again. We know that this 109.70 is already an intraday level where markets have stopped and bounced and broken and stuff like that. So now this trend line comes in around 109.70 as well. So that's going to be your first port of call for the euro. And as I said, on the downside, these low 109s. If they break, then I probably say we are going to have a look at 108 here. But for as long as it doesn't happen, I will not start to really lean onto this too heavily right here and now. Sterling looks a bit the same as the euro dollar. Yes, we broke through this trend line. Yeah, we tested the 108, 126, 70, 80. Yeah, we're not far away, but again here we need to clean this prior low around 126, 2025, and even confirm high 25s here for me to be saying that we are going to be going back to below 125. And I'm also saying it because the sterling crosses are relatively big still, and we did have okay data. So this is not one of my preferred dollar longs right now, but we'll see how the week develops because we know that we have important data tomorrow and the day after. And we are seeing this. Okay, this is now we've got a bit support. I'd say it's a decent pivot on the euro sterling in the low 86s here, but we saw this rejection up here, and we are coming back to more neutral levels. Looks as if sterling and the euro are trying to work together for a little while. So as long as we hold here, and that is really confirming this low 86. As long as we hold here, I think it's more neutral than bullish. But okay, we can leave that in the middle. We'll see after the data tomorrow. This may look completely different after tomorrow and the day after data. One we have to talk about, as I said, is the dollar yen. I'm not going to look at anything more narrow than or tighter than the daily right now, because there's no reason. I think for as long as this 143.60 figure holds, I know there's a shorter term trend line here, but I think in the yen it's a bit fragile when it's so steep. But for me, it's 143.60 figure. And then again, we're turning around 145. It's also a prior low here. If we start to break and hold, then I reckon we are going to move straight up in the 146s. There's another % waiting there for a starter. And I don't know where it's going to end. That's going to depend on the dollar and on the yields in the dollar and on what we hear or what we don't hear from the MOF officials. And as I said, trading around 145 with the expectations that the market has around this level, I think I find it a little bit odd that we didn't hear anything at all, because we have to note that from in 1 week, we rallied about 350 points, which is 2.5 something percent. That is a pretty decent move in a week's time, and especially since the BOJ, we've rallied like 7 big figures, and that is some move, no matter how we look at it. So I'm that surprised that they didn't even say anything. So that, I think, may give the market some well, some thought, and saying like, well, perhaps we should give it a try and see what they really want to tell us. Yeah, that's what I was saying about those yen, those euro crosses, right? You still, if you look at it, we're trading at pretty lofty levels in euro yen. We've broken above this 156.5 and holding, and we're moving up. I'm not going to spend too much time over it today, but I need to look at a couple of things which are going on, which are the commodity currencies, because they are not only trading with commodities but also trading on the back of the Chinese yuan. And look what I said on the Aussie. We had this retest of the May low here in the Aussie, and despite dollar China holding up, sorry, despite a bit of weakness in the rest, despite the weakness in the Chinese equity markets and stuff, the Aussie just bounced pretty nicely off it. Now we have broken below here, right? So the real level of strength or weakness, I think, is still around 65.5. For as long as we are below there, there's a fair chance that we are going to have a look in the 63s. But we have to note that it bounced from this level. Okay, I'm people in the room know I'm still a bit short from around 65 zone, but no, around 66. Sorry, but we have to pay attention to what's going to happen here around 64.60. Yeah, no, the brand. Blake was talking about the generational low in the Aussie that we did here, not around 65, but around 55. Okay. All right. The Kiwi is in a bit the similar kind of situation. We broke it below this trend line last week, and since then we are in a bit of a short-term channel on the downside. It even broke below, but again around here we've broken below here on the comparable to the Aussie. Here we did break below this prior low here on the from the 31st of May, and we're trying now to hold below. I wouldn't bet my house on it that it's going to break, but for as long as we are as long as we are below, sorry about that, 60, 25, 35, it's still very impulsive to the downside. A reversal can only be expected if we start to go back above 61. So yes, it's bearish, but looking at what's happening in the CNH and then the Aussie, I'm not going to push it. I'm rather managing what I have relatively dynamically in this one. Also because we have RBNZ on, so we can never rule out a surprise. Then I need to look at what's happening in China, right? Because we may be on our real next break. So it broken above 728. We are not yet above 728 and a half, broken above 727, sorry. We're not yet above 728 and a half, but we are very close. It's trading around 728, the figure right now. I reckon it's going to continue, but we have to pay close attention to what the PBOC will be telling us going forward. In the meantime, for the medium term, I think we have replaced the 710 by 720. So that's now your first big level of interest there. If the dollar CNH would start to get weaker again, I'd look at 720. If 720 breaks, then we may have a quick return down to the next level here. Oil. It did break as we spoke, yeah. Last week it did break, but then it failed, and we are trading. Are we trading around 82 and a half right now? No, we're trading around 83. Oh, this is the rate, 82.90. So as I said, I think we need to get below 82 and a half and hold there to call this one completely over. But we can argue that this starts to have the looks with a slightly different level and another peak. It starts to have the looks of what happened earlier this year in April. Okay, so we are going to break back above 83 and a half and confirm to keep going. Okay, otherwise we could be into the same-ish kind of pattern here, to be decided. Gold and silver, I don't really know. I don't really know. Gold, it's hovering around here. It's very heavy because the dollar is big, but it's not falling out of bed either. So I'm a little cautious on what's happening here. I'm not sure I want to get too much involved for as long as we are not going for a retest of this 1890, 1900. I'm very unsure. What do you think, still?
Well, they're still trading in a range. Gold is, I mean, they're not looking great, that's for sure. Not at the moment, with the dollar squeezing a little bit higher and yields also squeezing. Gold is testing with these lows, but really 1895 is the level that we've talked about for ages and ages. On the upside, 1985, but we're way away from that. So we're a lot closer to a breakdown than we are to a breakout.
Yeah.
And so that takes silver with it. And, the first big level of support is around the low 22s, which was the previous lows from June. But also silver, if you look at the big picture, we're still within a very, very, very big descending channel, which should be a corrective move if you scroll back a couple of years. And so this move after the COVID peak, we are in a very, very slow, grinding, descending structure, which I think eventually is going to get resolved to the upside. But still, now we are in no man's land. So
yeah, we're turning around actually. If my trend line is correct here, we're turning around.
Yeah. Let's see.
It's whatever. We also have to know that silver is pretty volatile, right? So once it gets underway, it can get much more volatile than gold. People should know that, right? Yeah, I see those low 22s as well. 21, 22 the figure as well.
Yep.
This one. Yeah, but to come back on gold, I think this inter range or inter channel or whatever, if you look at this confluence here around 1940, that's relatively interesting for people on the short term. We start to get back above 1940, then we can do another 25 bucks, I think.
True.
Yeah.
True.
Okay, I guess
there is by the way, there is supposed to be some kind of a BRICS meeting / announcement, right? There's on the 22nd of August or something like that, which it's I don't know, I've read all these rumors flying around. There's going to be some kind of announcement that has to do with gold and some kind of a currency announcement. I don't buy this stuff. I really don't, but there's a lot of chatter about that. So let's see if anything comes out of that.
Okay, in the meantime, Norwegian krone is still looking scary to me. If you really want to play it hard, you can sell into this 1150, but then you put your stop like literally very, very, very close by. I'm not feeling too brave to go against what's happening right now. We have Norges Bank on Thursday, right? And they've got their work cut out. So I think that's going to be interesting on the Norges Bank if they are going to react to any of those moves. 10.50 on the dollar Norway as well, but beware if it goes through 10.54. I'm not going to counter trade this thing for the time being.
The problem. Sorry to interrupt. The problem that Norges Bank has now is that they have a weakening currency. Well, a relatively weak currency still, because they're selling the crap out of it. But also they have inflation, which is falling faster than expected. So they have this problem. They don't want to be hiking like crazy into rapidly falling inflation.
Yeah. Okay then, gentle people. This is a short but was intense meeting. I think we are going to call it a day. We are going to call it a day.
And we get to hopefully Ryan back tomorrow.
Ryan will be back tomorrow. Thanks everybody for being with us on this relatively quiet but interesting Monday. The rest of the week will be fun. So save your energy and get ready for the rest of the week, right? Have a good day. We talk again tomorrow.
Thank you, Kay. Thanks, everybody.
Yes.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.